Have you ever wondered about the role of accounting in business operations? Well, consider it the backbone of business, the lifeblood that keeps the corporate body in motion. Accounting is the unsung hero in the realm of financial management, quietly ensuring that everything runs smoothly. It's like a silent knight, armed with ledgers and balance sheets, protecting the financial health of a company. It's through accounting that companies can keep a pulse on their financial health. It's how they understand their revenue, expenses, assets, liabilities, and equity. It's the compass that guides businesses through the wilderness of the financial world, pointing them towards profitability and growth. Accounting provides the crucial insights that decision-makers need to steer their companies towards success. It's the lens through which they view their business, bringing the financial picture into sharp focus and helping them to make informed decisions. Now that we've set the stage, let's delve into the key roles that accounting plays in business operations. One of the primary functions of accounting is to record and report financial transactions. This involves diligently documenting all inflows and outflows of money, tracking assets, liabilities, and equity. Picture a business as a living, breathing entity with a pulse. The revenue represents the heartbeat, the continuous inflow of resources that keeps the business alive. Expenses, on the other hand, are like the energy the entity expends to stay alive and grow. Assets are the lifeblood of the entity, the resources it has at its disposal, while liabilities represent obligations, the promises it has made to others. Equity, in turn, is the net value or the self-worth of the business. By keeping track of these elements, accounting provides a clear and comprehensive picture of a business's financial health. It's like a checkup that reveals how well the business is doing. Compliance with regulatory requirements is another crucial aspect. It's not just about doing business, but doing it right. With accurate financial recording and reporting, businesses can measure their financial health and comply with regulatory requirements. Accounting provides valuable information for analyzing the financial performance and position of a business. Think of it as the business's health checkup. It's through accounting that we can prepare essential financial statements: the income statement, balance sheet, and cash flow statement. Each of these offers a unique perspective on the financial health of a business. The income statement, for instance, tells us about a company's profitability. It shows revenues and expenses, allowing us to calculate net income. The balance sheet, on the other hand, gives us a snapshot of a company's financial position at a particular point in time, detailing assets, liabilities, and equity. And the cash flow statement? It reveals how a company is generating and spending cash, a vital indicator of liquidity. These financial statements serve as a compass, guiding managers and stakeholders in making informed decisions. Whether it's about investments, cost control, or resource allocation, these insights are invaluable. Through financial analysis, accountants can assess a business's profitability, liquidity, and solvency. Accounting plays a vital role in the budgeting and forecasting process, as well as in establishing internal controls for risk management. It's the compass guiding businesses through the turbulent seas of financial uncertainty. Let's begin with budgeting and forecasting. Accountants are like time travelers, examining historical financial data and market trends to predict the future. By analyzing past performance and understanding current market conditions, they can create realistic budgets and projections. This isn't about crystal balls or fortune telling. It's about understanding the patterns of the past and using them to chart the course of the future. Imagine a business as a ship. The budget is the planned route, taking into account known obstacles and favorable currents. Forecasting, then, is the act of constantly looking ahead, adjusting the course as new information comes to light. Together, budgeting and forecasting allow businesses to plan effectively, set performance goals, and measure their progress towards these goals. But what about when things don't go to plan? That's where risk management comes in. Accounting systems are designed with internal controls to safeguard assets, prevent fraud, and ensure the accuracy of financial information. These are the lifeboats and safety nets of our ship, ready to be deployed when things go wrong. Accountants develop and implement these control procedures, such as segregation of duties and reconciliation processes, to minimize the risk of errors or fraudulent activities. It's about creating a system of checks and balances, where every transaction is scrutinized and every penny is accounted for. This isn't just about preventing mistakes or catching fraud. It's about building a system that is robust, resilient, and reliable. These internal controls provide assurance to both management and stakeholders that the financial data is trustworthy. They can make decisions with confidence, knowing that the numbers they are basing their decisions on are accurate and reliable. In conclusion, accounting ensures businesses can plan effectively, set performance goals, and have assurance that their financial data is reliable and trustworthy. It's not just about counting pennies, it's about making every penny count. Accounting plays a significant role in managing tax-related matters and evaluating the overall performance of a business. One of the key responsibilities of accountants is to maintain accurate financial records. This not only involves tracking revenue and expenses, but also includes calculating tax liabilities. It's a meticulous process requiring an in-depth understanding of tax laws and regulations. By keeping their finger on the pulse of ever-changing tax legislation, accountants can optimize tax strategies to minimize the tax burden on the business. Accountants also ensure tax compliance, an integral part of financial management. They navigate the labyrinth of tax regulations, making sure that the business meets all its tax obligations on time. This prevents costly penalties and protects the business's reputation, providing peace of mind to both business owners and stakeholders. Beyond tax compliance, accounting also plays a pivotal role in assessing the overall performance of a business. This is where key performance indicators, or KPIs, come into play. KPIs are metrics that provide a snapshot of a business's health and efficiency. Examples of KPIs include return on investment, gross profit margin, and inventory turnover. By calculating and analyzing these metrics, accountants provide valuable insights into the business's operational efficiency. Accountants use these KPIs to evaluate how well a business is meeting its strategic and operational goals. They identify areas that need improvement and provide recommendations for enhancing profitability and competitiveness. This helps managers make informed decisions and strategize effectively for the future. So you see, accounting is not just about crunching numbers. It's about understanding the story those numbers tell and using that understanding to drive business success. Whether it's managing tax matters or evaluating performance, accounting provides the essential tools for effective financial management and strategic decision-making. In conclusion, accounting is indispensable for effective financial management and decision-making in any organization. In summary, accounting plays a multifaceted role in business operations. It lays the foundation for financial recording and reporting, aids in critical financial analysis, and guides budgeting and forecasting. Accounting also establishes robust internal controls for risk management, ensures tax compliance, and offers a framework for evaluating business performance. Businesses that recognize the importance of accounting and invest in sound accounting practices are better equipped to navigate the complexities of the modern business environment and achieve long-term success.